2, 1, action.
This is Monique Hoger with eXp Realty and the Shades of Gray. I am bringing you the second segment of the Real Estate. We are talking to our second lender partner today, and we will introduce her. She is from one of my favorite places, Toronto, right?
Yes.
So let the audience know your name, the company you work for, and just a little bit about you.
All right. My name is Ann Tran. I'm a mortgage loan officer with Point Capital Services. I have over 10 years in real estate experience and got into lending a few years back ago.
Yeah. And she was actually one of us. She used to be a realtor. She went over to the lending side. And how do you like lending versus, being a realtor? I know sometimes, like myself, I'm newly a real estate loan officer, so I'm excited to dig in and see, some of those, benefits and challenges that's to come. But give us your take on loans and mortgages and how you like the industry, or, pros and cons of both.
All right. Well, the reason why I got into lending is I wanted to see what products were out there so I can help educate my clients about what their options were in order to get a home.
Mm-hmm.
So I figured I'd jump into lending. It was like after COVID happened, I was like, maybe it's time to think about things, the change. And, it's hard to compare it. I like it because it's more information, it's more knowledge. Is the work the same? Far from it.
Mm-hmm.
As a loan officer, I feel like you're chasing your clients more. You're helping them and you're learning a lot. And I'll tell you, there's not a lot of consistency.
Mm-hmm.
But if you, as opposed to real estate, you know what you're getting into. We're looking at homes, we're negotiating, we know the formula. So I would say being a loan officer has definitely a lot more challenges than versus real estate.
Okay.
Realtor.
Now, what are have you experienced pressure to meet targets? Will you say that this is, being that in a sense it's still a sales role? How does things work, or how do you deal with the pressures to meet these targets?
Well, I first started off with a retail lender, and so they had their process and procedures, their ways of measuring your successes. And so, yes, cold calling, networking events, trying to get in front of as many people as possible was definitely part of the sales strategy and marketing. It helped me learn how I should have been a better realtor. I'll tell you that.
Okay.
Because it forced me to go network, meet people, and now I was able to talk about lending and finances, as well as empathize with their process as well. Like, I know what you go through as a realtor in terms of getting your clients, talking to the lender, going through that whole process of like the next 30, 45 days of financing, negotiation, all that stuff. So I was able to hopefully clear things up of any kind of mystery, what happens on the lender side.
Okay.
And what I did learn is that, you and we're a team trying to make our borrowers' dreams happen.
Mm-hmm.
But oftentimes our borrowers fight us in helping them. And it's so frustrating. I'm like, wait, we just want documents. We just want to see what's going on, because we're trying to make sure
we can see the whole picture,
so we know how to strategize what's best for you. A lot of times people think that we're just, scamming them, so make the most for us.
Right.
We don't get paid until we close that deal, and until you're happy, because if they're not happy, then we're going to hear it.
Yes.
And we're going to feel it.
So what about on the legal side? I know a lot of times lender face vulnerable risks, legal actions from borrowers, regulators, stakeholders. Can you talk a little bit about that?
I'm not so versed and familiar with legal aspects to it, but I do know that we have so many documentations that need to be signed so that you acknowledge what's going on, so that has disclosures that help prevent us from any liability. Right. So that's where all this paperwork comes in. Like, people think the loan estimate is a bonded signed agreement. It's an acknowledgement. The first time you get that loan estimate from your lender, and you can have multiple lenders working with you, they're asking you to sign it, not because that's what you're stuck with for the rest of the process, but it's just an acknowledgement to prevent lawsuits that may happen down the road because you weren't aware, but you signed it. You were aware.
Right. So now a lot of people especially realtors, love the pre-foreclosures, because that gives us an opportunity to get in touch with the owner, if we are able to, before their house goes up for auction. if we can list it, we can save them money, or a lot of realtors are wholesalers, so they may want to, offer them a cash offer because, however we can structure to be able to help them. How does the pre-foreclosure or the foreclosure process, as complex as it can be, how do you feel, or how does it put you, what position does it put you in as a lender, and how do you deal with those type of challenges and situations?
I haven't encountered a lot of foreclosures myself. I haven't heard a lot of mortgage loan officers having to deal with foreclosures, definitely on the servicer side and on the borrower side to kind of reconcile.
Okay. So can you touch on a little bit about that, like the difference between the servicing and then like what you may do?
Yeah. So as a loan officer, our goal is to get that right product for you so we can close that deal so you can achieve your home ownership or property ownership or commercial ownership goals.
Okay.
From there, what we do is take that loan, whether it's a non-QM, non-qualified mortgage or a qualified mortgage. If it's a qualified mortgage, it gets sold on the secondary market, like Fannie Mae, Freddie Mac, and they do their thing there.
Mhm.
But if it's a non-qualified mortgage, then it gets kept in-house, right? So those two. And then, what was it you're talking about? We're talking about, lost my train of thought. What were we talking about? Well, I know it. The servicer.
Sure.
So once you get a qualified loan and you're like a residential mortgage loan, what happens after that is we pass that loan over to a mortgage servicer. They are the ones that set up your escrow account who receive your monthly mortgage payment. And if it's above your mortgage, principal and interest, so you got extra escrow for tax, property taxes and insurance, that goes into your escrow account and they handle it.
Okay.
So if you miss a payment or you have an issue with payment, you talk to your mortgage servicer, and we sell that to the mortgage, and the mortgage servicer handles that from that point on.
Wow.
So,
Little technical thing.
oh yeah, so we are out of it as loan officers, the retail side of things. Once it's closed and out, we send it over to the servicer, and then it also gets sold on the secondary market.
Okay. So with the technology, everybody's hearing about AI this, AI that. And we've even taken classes. I'm sure y'all probably have offered classes on AI and how we can utilize that in our business. But how does that, as lending becomes more digital, how does that affect things with cyber security threats? I've been getting letters in the mail like, this company has been, compromised and your information may have been compromised. Are we all seeing a lot more of that in the lending?
That's been happening for a while. And so I would highly recommend you work with somebody who has encrypted communication services. Make sure all your documentation is encrypted and do not open any emails you're not familiar with. Like if you receive an email and it looks like it's from your bank, but you're not sure because you weren't expecting it, hold off.
Right.
Hold off. Reach out to your loan officer. Reach out to whoever maybe in charge of that file, your loan, and ask them, did you just send me something? Because I'm not sure what it is.
Right.
But yeah.
We do send the wire fraud form. That's one of the documents that we send with the buyer representation agreement specifically to address that.
Yeah.
So a lot of times when you have clients that they may wire transfer, if they're doing a rental, they may wire transfer to the landlord, or if we're going to close, making sure that that's coming from the escrow company, like you said, or the lender. So that is very important.
And there's only so much we can do. I mean, we can't control their side of the computer. So if that does happen, you open up something that's compromised, things get shut down, especially if it's encrypted, everything, in the background will start fixing itself.
Now,
But-
how do you, I guess, compare with or compete with some of these banks online?
Well, I'll tell you, it was this. It's hard. I don't know how to say, but competing because banks offer their own products, and as brokers, we have hundreds of products to offer. And I think the difference here is educating the borrower,
Right.
And oftentimes the borrower chooses the bank because it's more convenient because the bank already has all their financial documents. For us as brokers, we will need, or loan officers, we need to ask for your bank statements. We need to ask for your tax returns, your paycheck stubs. And this could be for the 3 months. It could be for 2 years, 2 years of bank statements, 2 years of tax returns, depending on the situation, whether you want to get a bank statement loan or just getting a regular, conventional loan. But we need all those documentation. Whereas if you went with a bank, they go, oh yeah, we've seen your stuff. It's okay. We have a product that's 7% That's great.
Right.
But really, we could probably offer you like 6.25, depending on your credit score and all these other factors too, right? But it's good to always get multiple loan estimates, work with multiple brokers to see what you're working with. And even though it may be a little bit more work to deal with, it's worth it down the road when you're not having to deal with foreclosures or short sales. Because, you shopped around, you saw the lowest price you can get, you played it out, and you're good to go.
Right. Now, I hear a lot of times people are like, well, I'm going to go look for a credit union because they tend to have cheaper interest rates. How does that settle with you? And is that true? Or again, does it just go back to everybody has their own
Yeah.
product? Okay.
Everybody has their own product. Same thing with credit unions. They have their own product as well. I could be off on this. They may have access to other partners as well, but not as many as a broker might have.
Okay.
So, but credit unions are like, I think they're going to want you to be a member. So they're going to get your information from there. And they're like, hey, we know a lot about you. Right? So it's easier that way because you've already established that relationship. But you really got to take the emotion out of it when you start buying a home because it's money involved in our future and livelihood.
Yes.
I don't want to hear people losing their savings because they bought a home.
I know. It's so scary. It's definitely a different, mental capacity when you have to think about renting a home. You have all the assistance from the complex or the landlord, whereas now you have to take on all of these things. You have homeowners insurance, you have taxes you got to pay. If something breaks down, I got to fix that. But I feel like home ownership, it's yours.
Yeah.
You're not just it's like throwing away money when you're renting, but it's not for everybody.
Well, that's
Some
interesting.
people like the convenience.
Well, we hear that often, that philosophy, that mentality of that it's throwing away money. But you can look at that as you're paying for your shelter and your livelihood, right? It's not throwing away money if you're happy and you've got a place to live. Now, what kind of options do you have going forward, right? Well, you have an option of freedom if you rent, right? I can leave anytime. I don't worry about anything. Or you can have the option of like wealth growth, asset growth. If there is that, there are a lot of
You may have
options.
an opportunity to Airbnb if you're not in a...
If the market's good for that.
Right.
Exactly. And if you're in the right time, your house will appreciate in value and you get some equity. But if it's not, maybe you should have rented. You don't know. It's a gamble at the end of the day. You have to know these things.
Yeah, and I think it's specific to each individual because, like I said, you have some people that love the luxury of renting and, being in an apartment and all the amenities that it comes with. You may have somebody that may pay a higher amount of rent because they want more of those amenities that they're not going to get in a house. So, to each his own, but it's really up to each individual. So I want to dig in a little further and talk about some of your own personal experiences in the mortgage business. So again, the segment is to talk about things that people don't see, that other podcasts may not share, TV shows don't, show you. What is some of the real side of lending that people don't see every day that you have maybe faced or dealt with?
Right. I touched on this earlier, which is chasing documentation. It would be make our lives a lot easier to help you if you guys would just provide the documentation as we requested. The sooner the better, so we can give you that loan estimate or the pre-approval letter so you can go shopping sooner. But we also need to assess everything, so we can provide that soon. So that's one thing I want to stress. Another thing is people in their debts. I think people need to realize, even though right now they're stretching to 50% DTI, you're really pushing it. You're pushing it down the road in terms of affordability. And to be in a position of a home ownership where you're like, this is smooth sailing, I love this, you have to be in a position where you're not in over your head. And everything is good to go. And your investment's sound, you're making money, you're not purchasing or acquiring another business in order to pay for your property, right? That's one thing that
Everybody paycheck to paycheck again.
yeah, that gets tricky because you really have to be honest with yourself when it comes to your finances and what you can afford. And maybe it is just renting a house for another couple of years, right? Another thing I also want to mention is this misconception that when you do a fixed rate mortgage, that's your constant house payment, right? Now that's true. Their principal and interest will stay the same for 30 years. And people go, oh yeah, I've got a conventional loan and this is my fixed mortgage payment for for the next 30 years. And things great. And then the next year, their mortgage payment went up. Why? Yeah, why? Well, property taxes as well as your home insurance. Those things will increase depending on the market and the conditions of the environment. And so instead of paying, $2,000 now, you'd be paying $2,300 a month. Right. And some people, that's too much for them. Another thing on top of that is if you buy a new property, a new home development, like a new build, the taxes look low. Why do the taxes look great? Payment was great because last year, that was just a lot. It was no one was living on it. And so when you're getting a loan with a new builder and they're like, wow, that's a great monthly payment. Wow, that's fantastic. Yeah, I can do that. Next year, your taxes go up significantly.
And more than likely, they have already completed the development.
Yeah. And that's another, so you're buying at hopefully you're buying at a low price point. But when you're ready to move out in the next 2-5 years, usually that's kind of what happens. Selling it for the amount that you got it for will be impossible. Right. So that's something to think about. But more importantly, I want to talk about that monthly payment that people expect it to be the same after year 2, after year 1.
Right.
And so be prepared for that.
Yeah. The homeowner's insurance goes up, which is after your payment, taxes are going up. And it's based off of the market, you know, and that's what a lot of people don't realize. Even when people are selling their home, for example, and they're like, they put all this stuff into it and they want to recoup their money. But sorry, we don't care what you put into it. It's what the market says what your house is worth, not what you think it's worth.
Exactly.
So it's just, really educating the client and letting them know to make sure that they're comfortable and the payment's going to be affordable.
I just why it's very important to be mindful when we say that investing in real estate is always a winning investment. Not always a winning investment, especially if you're not really educated and seasoned in the industry. Because it could be a very tricky, very sad gamble.
Yes.
Right? So, but as long as you have the right people in your corner, like Monique and myself, who can educate you through this process, as long as you're not, afraid of hearing truth and being honest and upfront with you, then we can make this happen. We can find properties for you and get you in a home, and you won't be in over your head. You'll be prepared for the next 3-5 years, and you hopefully will be able to sell it for a price that you can be happy with.
Yeah.
So.
Well, I really appreciate you taking the time to allow us to come and talk with you. Where can the audience reach you if you want to, add any social media, phone number, email? Let them know how they can get in touch with you.
Well, you can, first, I get the number works. First, 281. What is my number? 713-294-1790. That's where you get a hold of me. It's my personal number. My email address is ann@pointcapitalservices.com. And on Instagram, you can get me at AnnTXLender.
All right. Well, there you have it, guys. You have another great lender. And of course, another great realtor. And if we can help you with any of your concerns or issues, you know how to reach us. So thank you for your time. Don't forget to like and subscribe because we need your following. We try to be an educational based platform here. Stay tuned. More to come with the international real estate. So stay tuned. Thank you for watching and we look forward to talking with you soon.